I thought it would be appropriate to start with Cracker Barrel, since they're known for their big country breakfasts. We're sort of still in the breakfast time, right?
Yep.
It's almost 9 a.m. All right, so Cracker Barrel in the news here, ticker symbol CBRL. It is up 15.5%, guys, this morning. It is up 43% year to date. And really what this story tells us, it's the recovery there at Cracker Barrel continues. Remember that customer backlash? It changed its logo, redesigned its restaurants, thought it was going modern, and consumers went, wait a minute, we love you because you're nostalgic and old-timey. So they went back, and we're seeing things pick up. Now, store traffic, it is still falling, but declines have gotten less steep. So I guess that's good news for the stock. And the chain did raise its full-year revenue guidance. The company has since been focusing on improving its food, its service, and it's also, I don't know if you've gone in one recently. I saw pictures of this online. They have this American Heritage line for the country's 250th birthday. So, I mean, everything from, T-shirts to those salt and pepper shakers, Route 66 signs. They're selling like hotcakes.
I haven't looked at a restaurant financial statement in a while. Paul, can we remind ourselves this is a tough business?
It's a tough business. And
you're bringing in $1 and you're hoping to make 3 or 4 cents.
Yep. And so it's all about volume. And so you've got your core customers make up the backbone of your restaurant. And for Cracker Barrel, the core goers are just
that's great, but we're addicted to NVIDIA.
No, I'm addicted to the biscuits and gravy there at Cracker Barrel's to die for.
Yeah, but the margins are razor thin at those restaurants for sure. All right, let's move on to a retailer now, and that would be Chewy, the pet supply company. Tom, I think you are a big consumer there for your pets of the Chewy. The stock is down 1.5% here, pre-market, and it has been a tough year for Chewy because the stock is down 38% year to date. Mixed quarterly results from the company. Adjusted earnings coming in line with estimates. Net sales rose about 8%, narrowly beating the street. The company did cut its full-year sales outlook, maintained its profit outlook. Some are saying that, look, the stock could be down even more because Chewy avoided the worst case scenario. A couple of weeks ago, the CEO came out and said, consumers are more stretched than ever entering the new year. So maybe it's a case of it's not great, but it could have been worse.
On the income statement, I got 5 cents, 6 cents on the dollar.
It's a tough living.
Yeah.
I just, you do your Chewy.
Consumer
Vet bill
products,
needs, the food, the pads, the Chewy bones.
You know about it.
About
these items.
I mean, the Chewy bones are the best. But they're making 6 cents.
We won't ask how you know that.
They're making 6 cents on the dollar.
Yeah. That's rough stuff.
Do you have another one?
I do. Of course I do. So several large trucking companies. I actually have 2 for 1 for you here. So I've got FedEx Freight and Old Dominion. They are coming under pressure. Amazon announced an expansion of its shipping service. It is called less than truckload services. That's when you carry shipments that are larger than parcels but smaller than full truckloads. And they're going to expand that business to any kind of destination across the country, from third-party warehouses to retail partners, and that has the transportation industry all in a tizzy. This they first announced this like a couple weeks ago. UPS was hurt because of it. Third-party logistics firms like C.H. Robinson, and now we're seeing FedEx Freight and Old Dominion sell off. By the way, FedEx Freight was spun off from FedEx just a few weeks ago.
I worked on the IPO of Old Dominion Freight Lines in 1991 as a junior banker. How about that?
I'm glad
I still may have the model for it if I go
could take
back
you down
on a
memory
floppy
lane.
disk.